at Post 9. Welcome back.
Hey, thanks.
You know what I find interesting is that there's so much risk on in tech, but you don't necessarily see it in the venture world and the going public world. It's not risk on yet.
There's not risk on yet. People are thinking longer term. Therefore, they're still concerned with interest rates. They're still concerned with the IPO market. And they're still concerned with who the next president's going to be, or who the next presidential nominee is going to be even.
I mean, so we've now morphed into the political conversation coming into the boardroom at VC firms.
Just general risk. So if you think about IPOs being the riskiest issues, the newest issues, how do people feel about the rules of the road? How do people feel about the long-term rules of the road on interest rates? How do they feel about the political issues? How do they feel about consumer confidence? And, obviously this earnings season will give a sense of how confident both enterprise and consumers are. And then where do we go from here?
What do you think we're going to get in earnings season? Because there's a lot of hype now to theoretically live up to, right?
There's going to be a lot of a mixed bag. I think there's a lot of hype to live up to, especially some of the tech names. You're going to start to see, and we've talked about this in the past, when does AI really work, right? Is Microsoft going to be able to see Copilot is really working? It's really being able to be an ROI sale. ServiceNow, which has slumped a little bit, they're really incorporating AI. Are they able to sell more of their product? Because although not being AI native, they have a lot of AI infrastructure. Have people transitioned from doing proof of concepts and testing AI over the last 12 months to actually implementing AI in the next 12 months?
Is that going to be a more serious part of the conversation around AI and these tech companies? The who has it now and who has it later? Everybody may fit into one of those categories, but there are only so many dollars to go around and only so many results to be chased.
And that's why the software index has drifted down, because people are unsure who's invested ahead of the curve and who's going to be leapfrogged. So as we think about the software universe, both in the public market and the private market, you think about who's investing for the future and who's going to be leapfrogged by maybe an AI native new venture solution or by a big company who is invested ahead of the curve, which is why everybody's buying as much NVIDIA as they possibly can, because they do not want to be leapfrogged, but they're unsure who's going to win.
How often are you getting a look at prospective things to invest in for the capital that FirstMark has?
Several times a day.
Several times a day?
Every day, several times a day. Most of it being AI, or how AI affects an ecosystem, financial services, healthcare, whatever that may be.
And how's the decision-making process on that?
Well, I think we have a framework of how do we, is this really an AI solution? I mean, there's a lot of things that people claim are AI, but are not AI.
Oh, do you have have you developed a healthy level of skepticism in the kind of environment we're in?
We have for the last several years. As soon as AI became a hype train, you just see the number of things in your inbox saying AI for X, AI for Y, AI for Z, all day, every day. And then we go back as a firm and as a partnership and say, hey, what's AI really doing? Where is it going to really be able to create value? And we have a framework the same way we have in software, as is this technology really going to be able to create value and capture value? And therefore, your enterprise customers or your consumers are going to get out more than they pay for it, because if you're not creating value, you're not going to be able to capture value in the long term.
Let's go back to where we started, when the doors sort of swing open for capital markets and more IPOs. What's the mechanism? Is it, as I was discussing with our market guests, like rate cuts? Is that?
I think that's going to be one of them. I think there's going to be a more settled political environment. I think we're going into what's going to be a dead season, right? We're already post 4th of July. Things start to slow down. August will be very slow, and then there'll be a very brief window of about 6 weeks from Labor Day to when things slow down for the election.
That's a tiny window.
That's a tiny window. So you might get a couple of things there, but it's not going to be that great. But you have to hope that the election is pretty clean. There's a new president, and the interest rates get cut, and people have a pretty clear rules of the road that finally then, after 3 years, reopen the window for IPOs in the beginning of 25.
We'll leave it there. Rick, thanks.